most of your losses are due to you actually not understanding your emotions within trading and understanding your psychology. And they can be easily avoided if you understand these certain things I'm going to tell you today. I'm going to go through exactly what happened in the first year of me trading and how I overcame all these different psychology factors and all these little things that were holding me back. So it's going to be just a lay down video of just me explaining everything. So I'm going to get right into it with the first thing that I want to talk about is that within trading, we're so fixated on looking at what's happening right now. What happened right now? I had a loss right now. It's affecting me right now. I'm upset about it. Even though this loss might just be a 1% loss. But in the bigger picture, this is something you need to start doing is zooming out. You need to be able to zoom out within trading and look at the bigger picture because maybe today you're down 1%, but overall you're up 10%. So you need to be able to zoom out within trading and actually look at the bigger picture because this one single trade is not going to like define how your trading career is going to go. It's not making you a loser. It's not going to define that you're not profitable. You just had one single loss, so you don't need to stick on it for the whole day and think about it the whole day. And you just need to be able to move on by being able to zoom out and look at the bigger picture. Okay, this is just part of my strategy. This is the one of the losses along the way to actually making my 60% win rate. So you need to be able to zoom out of these pictures and be able to understand that losses are part of trading. They're always going to come. They're always going to be there. And there's always going to be something like a loss along the way. There's always going to be something coming along the way like a loss. So do not worry about what's happening today and stress completely over it thinking, oh, I'm unprofitable. I did not hit my trade today. You need to be able to zoom out and just look at the bigger picture. Maybe you're going to be profitable in the month, even though if you had 2 losses in a row, in the bigger picture, you're going to have more wins coming along the way. So that's the first thing that I wanted to kind of say. The second thing that kind of combines together with that is you need to eliminate your expectations. Going into trading with expectations is what's killing your gains. This is what's making you overtrade, over risk, and just get into dumb trades that are not even there. Having expectations coming into trading is the worst thing you can do. Coming into trading thinking, okay, this week I need to have 5 trades, in the sense of that I expect to have at least 5 trades. You can't be coming into the market thinking, okay, I expect to have 5 trades, because if you're going into the week and you're already on Wednesday and you've only had 1 trade, you're like, oh no, I'm expecting to have 5. So you start making up in your mind these little trades and ideas that are not even there, but in your mind it seems correct because you already had the expectations. You want your expectations to come true, because if you don't have your expectations come true, in your head you're going to be disappointed. So the first thing that you need to do is completely eliminate the expectations, because that's just going to drive you into taking trades that are not there, trying to hit goals that maybe it just isn't the month for it. Like sometimes I see traders coming in, I expect to make 10K a month from trading. It might be the worst price action you've ever seen, and you might only make 2K, but at least you made 2K. That's the way you need to see it. You need to come into the market and just say, okay, I expect to just make as much as I can, and that's it. If I make a K, I make a K. If I make 10K, I make 10K, and I just learn from the little mistakes I made along the way. You can't come in and say, I need to make 10K, because if you're far away from your goal, that's when you're going to start pushing things that are not even there, and that's going to just drive you down a deep hole, which is going to be very hard to get out of. So that's something that I would say that is actually very important within trading. Another thing that I would definitely say that will help within your psychology is to stop thinking about money. I know it's difficult. I know it's easy to say, but difficult to do, because trading, we're in the money game. All we think about is money. There's money around us 24/7, prop firms, money, live accounts. There's money all around us. This is the game of trading. But what I mean by this is that you can't be thinking of money and just thinking about it like this, like, I need to make this because I need to pay my bills at the end of the week. I need to make this because I'm in debt. I need to pay this. I need to make this because I need to pay a friend back. You cannot be looking at trading in this way, because it's going to slow down your progress so much. You're going to actually maybe fail even more than you think. And the reason why that is because you're putting this immense pressure on yourself to succeed. Even though there might not be the opportunity to succeed in the moment, it's like you're like, I need to make it work. You might see absolutely nothing in the chart. The chart might be absolutely horrible. There's no trades, there's no nothing, but you're wanting to make it work because you need this money. So I say this to a lot of people that come to me. I'm trading, but I've got a 9-to-5 job. Like, should I quit my job? bro, you're probably in some of the best positions to learn when you have a 9 to 5 job, because the last thing you're worrying about is money. Your bills are going to be covered. Your rent's going to be covered. Whatever you need to provide for yourself, food and everything like that, is going to be covered. So at least you're not going to trading to look to make that money, in the sense of you're not relying on trading to feed you. You're not relying yet on trading to pay your bills, but you're just relying on trading to become better at it and just see progress, pass more funded accounts, maybe work your way towards a payout, but not actually forcing something that's not there. So I think having that thing of having a job in a 9 to 5 is probably one of the best positions. So I always say to a lot of the students that come into my academy, when they join MV Academy and they say, I have this job, and they're like, should I leave it? And I literally tell them, keep it for as long as you can, until it's getting in the way of your trading and you're actually making more money with trading than your job. Then okay, I'd understand that you can leave it. But when you're at the beginning, when you're still learning, you're still making those mistakes at the beginning, you're still trying to just come up from everything, it's okay to have a 9 to 5. That's probably one of the best things you can do, because you're relying on your 9 to 5 to pay for everything. And trading is just a thing on the side. You're just learning. You're just doing it for fun. Even though you're putting in effort, you're still doing it for fun, and you're going to see progression so much quicker. So that's definitely something I would say that's going to help you. And another thing outside of trading is you have to have a good routine outside of trading. You need to be in a good routine. You need to be going gym. You need to be focusing on your religion. You need to be eating healthy. You need to have some sort of good routine, good sleep schedule, anything like that. And it will translate directly to trading, because how do you expect to have a bad lifestyle? So you don't go gym, you don't pray in if you're religious, you don't eat well, you don't sleep on time. How do you expect to come to something as complicated as trading and succeed within it, when trading is purely about being disciplined, being on routine, following your rules? Is purely about this. So how can you expect, if you have a bad lifestyle, to actually come to trading and be successful? So the thing that I've seen the most with myself in that first year of trading is that I had a whole time where I wasn't really disciplined at all. I wasn't going gym. I was slacking on my prayers. I was slacking on my diet. I was just not doing anything with my life. Even my sleep schedule, absolutely horrible. But when I actually started changing my life in the sense of, I said to my brother, I was like, okay, let's go. We need to focus. We need to get to the gym. We need to work out. We need to start eating better. We need to get into that routine, start focusing on our religion. I'm telling you right now, that's when my trading started. Boom, boom, boom. I started seeing results in my actual trading. And that is when you're going to actually start seeing your real results within your trading career. So I definitely say, get your discipline ready outside of trading. It's the easiest way to kind of boost you up a level already without even doing anything within trading. If you get your life sorted without outside of trading, where it comes to gym, where it comes to religion, whatever it is going to help you in so many ways when it comes to trading. So this is something that I would definitely say try to focus on when it comes to trading. And another thing that I think is very important as well, talking about the discipline section, is being a restricted trader. You need to restrict yourself as much as possible. And there's a quote by Waqar Asim that I live by: a restricted trader is a profitable one. What he means by this is that when you're restricting your trading in general, so maybe you're going to only risk 1% every day. You're only going to trade one time a day. You're only going to trade 1 hour of a session a day. You're only going to trade with these certain confluences. You're only going to trade these certain pairs. You restricting down these things is you restricting down the chance of failure, because you're taking away all these other chances that you had. Maybe there are less probability. So you're just narrowing down your chance of failure. You're restricting it down. And the more you do this, the more profitable you'll be. But some traders might think, okay, but like I might not be able to trade as much. I might not have as high of a trade frequency. But this is where you have to either choose higher trade frequency, lower win rate, or higher win rate and lower trade frequency. Because if it really messes up with your brain when you have many, many losses, maybe you need to focus on trading less, but with higher probability. So restricting it down more. If you don't really care much about that, but you care about trading more, still winning, you want to just maybe put your trade frequency up and just lower your probability a little bit. So your win rate a little bit. So because the way I see this is that these things balance out every time. When you raise one, the other one will go down. When you lower one, the other one will go up. So you need to balance these out somehow to the point where it fits your like trading type, it fits your strategy, it fits how you trade. And this is something that I think is very important in being restricted, because if you're not restricted, you're giving yourself so many more chances of failure than you would when you're restricted. If you think about it, as a trader, you need to be restricted. You can't just go into the trading market and just run with freestyle. If you're restricted, it's just giving you less and less chance of failure. So definitely stick to this kind of trying to stay away from stupid ideas in the market. Restrict down your strategy as much as you can. And trust me, this is where you're going to start seeing results within your actual trading. And another thing that I want to talk about as well, talking about restrictions, is I want to talk about preserving your capital. There's this whole idea in the trading space that, oh, you can't set your stop loss to break even because you're not fully embracing the risk that you put in. I don't know who put this into the trading community, but I hope you get kicked out of the trading community, because the way I see it, a real trader sits on the chart and manages his trades. He manages his positions, manages what's going on. And as a trader, if you know that your trade, it might not go in your direction when it reaches a certain point, why would you not stop your trade out early? Because the way I see it, there's a lot of traders that say, "Oh, why did you go break even? You should just firm the loss. You should just take the loss like a man." But bro, I see it in the way of, if I can preserve my capital and I can save that extra 1% that I'm risking, why should I risk it? If it goes past a certain point where I'm not expecting price to reverse anymore, but if it reverses from here, my trade's already invalid. Why can I not put it to break even? I'm saving myself 1%, and trust me, when I started implementing my break even points in my trading, this is when I actually started seeing some of the most best results I started seeing within my trading career. Like, I started seeing days where I got the market direction completely wrong, but I still came out the market with at least a few percent, because I set break even, I have my partials, and I'm preserving my capital along the way. I'm not waiting to hit that 1 to 10, one move trade, hoping that it moves all the way there without coming down and wicking me out of my stop loss. I'm actually playing it safe. I'm managing my trade. I'm there active on the chart, and that's the best way to be as a trader, because when you're active on the chart and you're watching the chart doing this thing, that's when you're improving most as a trader, because you're under that pressure of learning real-time movement of the market. You're learning how the market's been moving. So this is something that you're going to see benefit you a lot when you preserve your capital. This is something that I always try to tell to my students, is that your break-even point is so important, so don't forget it. There's so many times I have trades running, and I'm asking my students, "Oh, like, did you guys manage to catch a trade as well?" And they're like, yeah. I'm like, "Did you set break even?" "Oh, no, I forgot." Like, this is something that's very important, because this little mistake, if you don't go break even, can lose you percentages in your account for no reason. Even though you could have prevented it way earlier, it can lose you money for no reason at all. So this is something that I try to just stick into my students' minds, that break even is actually very important. Preserving your capital is very important. You're trying to survive in the trading game. You're not trying to just farm it. You know, I'm a man. I lost 2%. Yeah, what? Because I put my risk in. Don't worry about these guys. But the next thing I want to talk about, which I think is the actual fundamental part of trading, that I'm actually surprised that so many traders don't know this. I'm so surprised that so many traders don't know nothing about this, is market structure. So many traders that don't understand market structure, and they don't understand what the market is and how the market moves, or why the market moves. Like, I've asked traders who've been in the game for 3-4 years, and I'm asking them, like, do you know what the Forex market is? Do you know why it moves, why it creates highs and lows, and why it's coming back to these areas and reacting from it? And they're completely clueless. Imagine being 3-4 years into your trading journey, and your mentor, your teacher, or whoever you've been watching on YouTube did not teach you anything about why the market moves, or they might not even understand it themselves. Your mentor and teacher might not actually understand themselves why the market moves. Some people, it's coded as an algorithm, it's this, is that. Bro, the market the market is the largest financial market in the world. The Forex market is the largest financial market in the world. I think it's like $7 trillion now are being traded on it every single day. Yeah, you think this is just coded, like some AI is just moving up and down like this? It's institutions, banks, stuff like that, because it costs hundreds of millions, okay? In the Forex market, it costs hundreds of millions to move a single pip. So do you think that's random, or some algorithm moving it? It's not. It's never random. Everything happens with a reasoning. So you being able to understand this is going to give you such clear direction of the market. It's going to fix your psychology because now in your head you're more sure of where the market wants to go. You're not going to be second guessing yourself. You're not going to be doubting yourself when you get into a trade. So learning this whole external, internal price action is going to make you an elite trader. I'm telling you, this is something else I try to drill into my students' heads, and this is something that all my students tell me that they were never taught before by previous mentors, by previous YouTube videos. And when they came to me, this is something that they started saying like this is actually changing the way I'm looking at the market. Because before I was like, okay, I'm looking at the market on just a 4-hour. I see a breakout structure. That means that we're heading upwards. What about the retracement? For the time being, we might be heading down for a while. So there's a lot of things that comes within trading, and you need to learn market structure, internal, external price action, and you need to learn fractals of the market. That the same way, like everything on the 4-hour applies to the 1 hour, everything to the 1 hour applies to the 1 minute, everything on the 1 minute applies to the 15 minute. The market is fractal. Everything that applies on the 4-hour time frame applies to the 1 minute time frame. The market works the same on each time frame. It's just there's more data and it's more detailed on each time frame. So these are all the little things you need to teach that I found so important, that I needed to make like 3-4 sections on my mentorship for my students, because I just found it so important. So this is something I would definitely say, try to like stick on these little subjects and learn them as much as you can. And the next thing I want to talk about as well is journaling. Journaling is something that a lot of traders kind of have beef with. Myself, I had quite a lot of beef with this kind of idea of journaling and writing down my trades and writing down my mistakes and what I did good and what I did bad. Because we've all had this. You have your winning trade, you have your winning day, you come to your notes, you paste your little screenshot there, you're writing, yeah, I wrote this because it was a great trade, and I did this because it was amazing. I hate 1 to 6, whatever, yeah. And you're writing a whole story on it. But when it comes to your losing days, you're like, I'll put it tomorrow in my journal. Yeah, I'll do it tomorrow. I'll do it in a few hours. Yeah, I'll do it later. I'll do it later. Or when you actually do it, you just a screenshot. Yeah, it was just a bad trade. Yeah, and we move on to the next one. Very, very simple things that you're writing. But what I actually started realizing is when, instead of going into my trading journal and just typing in my trades, saying, okay, so win, this is my confidence, that's it. I was making a case study after every single trade. So the way I'd look at it, I'd look so detailed into everything, and I'd mark out every single point where I could explain why price did this. I'd say, okay, price did this because it did this. Price reversed me here because of this. I understand the reason why I got stopped out is because of this. I was going so into detail and making a whole case study. And when you do this, it's like another way of learning. It's like you're learning from your own mistakes. And this is the most crucial thing that you need to be doing, because you're making these mistakes for a reason. So learn from them. Don't just put them aside and put them in your folder. Okay, that's a loss. Learn from it. I'm telling you right now, the losses are more valuable than the wins you have in trading, because the losses that you have in trading, you can actually sit there and study them and understand where you went wrong. But the wins, you can't take much from them because you just did exactly what you know you should do. But the losses, you can actually look at it and see, okay, wait, I went wrong here. Why did I go wrong here at this point? Okay, because of this, why did I go wrong at this point? And you can make a whole case study on it. And that's where you're actually going to start seeing success come within your trading. This is the only way that you're actually going to see your progressing within trading. And the next part that I kind of want to link together with this is holding yourself accountable. I see a lot of traders sit there and say, it was the market, it was my psychology, it was the strategy, it was news, it was whatever. Bro, I'm telling you right now, 99% of the time, it was none of these things. So you need to be able to sit there and hold yourself accountable. You're the only person that's going to be 100% honest to yourself, because you know what you did wrong. So you need to sit there, brutally be honest to yourself and say, okay, I messed up here because I did this wrong and I was being lazy. I was looking at my phone, I was watching TikTok, I missed this trade. I was being too focused on the 1 minute because I did this. I overlooked this. I missed this confluence. I didn't do this. I didn't do that. I didn't follow my rules. You need to be so strict with yourself and so accountable with yourself to the point where, okay, you start learning from all these little mistakes and you just start being honest with yourself. So when it comes next time to being in that same situation in the market, you will remember that last time when it happened and that you're accountable with yourself when you were journaling. and you were like, okay, oh shit, like I remember last time I messed up because I was just being an idiot, I was doing this, let's not do it this time. And it's going to click in your brain, it's going to be stuck in your brain. So from that point on, you're literally going to start seeing so much more results when you start actually holding yourself accountable and not being scared to say to yourself, okay, look, you're fucking up right now, lock in. So that is probably the last thing that I'd say that would, when you tie all these things that I've given you today and put them all together, that's when you start seeing your trading psychology actually work. Trading psychology is not purely about your brain, it's purely about the things that you're doing and how it affects your brain. So you need to see it in these ways of that. The way I see it is that you need to learn from your mistakes, and that's my main point. You need to use these mistakes as valuable key lessons. And the way I see it is that, imagine you were a little kid and you got bit by a dog when you were a little kid. Yeah, every time you see another dog, you are going to be scared of it initially, and that correlates the same way to trading. You're new to trading, you had your first big loss. Every time you see that similar setup happen, you're now hesitating to get into it. You're kind of pushing away. Okay, no, I don't want to get into this because last time I got stopped out. But it's because you didn't learn from the first time you lost. Same way as you were a kid, maybe your parents didn't tell you that every dog is not like that. The reason you got bit is because you went to a dog who had a leash on them and they're in an area where you're not supposed to pet them, or maybe the dog looked very aggressive and you still went to pet it. There's reasons why that happened, and it should be the exact same way that there should be reasons why you lost. And you need to understand the why, so you can get rid of that kind of fear of holding you back, that freezing fear when you freeze in the moment, when real money is involved, when the real trade is involved. You need to be able to overlook those little things, and that comes by using your losses as lessons. This is my most valuable thing when it comes to psychology. So when you understand these things, this is exactly when you're going to start seeing success within your trading. And now I'm making even a whole section within psychology for my students, because when I realized how much people actually get affected by psychology, I thought it was just certain types of traders. It's actually like, I feel like 99% of traders actually get affected by psychology. And I think it's that other part where, in my opinion, a lot of it is to do with technicals, understanding the things in trading, understand how the market moves, whatever, looking at the chart. The other big part is your psychology. And then there's another top part on the pyramid that I would say is your actual edge, your strategy, your actual proven strategy. Does it work? Does it make you money? That is the three things that kind of makes up trading. And I think psychology is actually a very big part of it. So I would definitely recommend that you guys kind of try to stick within these type of rules that I told you guys, and try to actually implement certain things into your trading, like journaling your trades, but making a case study around it. Being brutal to yourself. Say to yourself, I messed up today because I was on my phone. I messed up today because I just didn't want to look at this confluence. I wanted to trade today because I was greedy and I wanted to make more money. You need to be so brutally honest with yourself, and you need to be so detailed to the point where you don't have room for error. You need to be strict on yourself, restrict yourself down. When you start putting all these things together, you will start seeing progress. So hopefully this helped you guys, and I'll see you guys next video.